Hello and welcome to the Business Standard Morning Show. I'm Nazia Iqbal. It's the 23rd of November 2023 and here are the questions we will be answering today. Who are the new saviors of Indian startups? What comes next for the Oberoi Group? Has the rally in shares of gold financiers run its course? And what powers do state governors hold in India? Global slowdown and an increased scrutiny has put an end to India's roaring startup party. From minting new unicorns almost every week in 2021, we have just one this year so far. But there are signs of thaw in this funding winter. And this time, Desi businessmen are leading the charge. But who are these new saviors of Indian startups? Kasturi Akhil takes a look.
Supply chain disruption by the Russia-Ukraine war and soaring oil prices jacked up inflation across the globe. It nudged the central banks to hike interest rates and suck liquidity from the market. The plan was to tame prices. While the recent US data suggests that inflation has started to come down, the high interest rates spoiled the Indian startup party. With money in short supply, investors tightened their purse strings and reassessed their priorities. India, the world's third largest startup ecosystem, slipped into a funding winter around the middle of 2022. In the January to July period this year, fund flow dropped by as much as 77% from the same period last year. It had hit a record high of $37 billion in 2021. Soon, investors started sending grim memos to founders who, in turn, started firing employees. But it seems the tide is turning again. Despite all odds, several entrepreneurs and investors have taken the risk to invest in Indian startups this year, signaling a potential thaw in the funding winter. Zepto, for instance, became the first Indian startup to cross the 1 billion valuation mark and attain the unicorn status in 2023. The instant grocery delivery app raised $200 million in August from US-based investment firms Stepstone Group and Goodwater Capital. Indian investors too have joined the fray. Predominantly corporate professionals or startup founders who quit their jobs in established companies and either started their own ventures or invested in somebody else's. Paytm founder Vijay Shekhar Sharma launched a 30 crore rupee investment fund last month. He wants to invest in artificial intelligence and electric vehicle sector related startups in the country. Zomato founder Deepinder Goyal invested in a Mumbai-based sneaker reselling startup called Main Street Marketplace earlier this year. Nikhil Kamath invested in Nazara Technologies, a digital gaming and esports company. Flipkart co-founder Binny Bansal's investment in Cure Foods, a cloud kitchen service, and Manipal Group's Ranjan Pai acquiring a stake in troubled edtech giant Byju's clearly signals a new trend.
Indian investors, and Indian founders who made significant money through exits are setting up their own funds. And many high net worth individuals have begun setting up their own funds. And those funds are completely funded by those individuals and families, or they are partially funded and they also begin to get other LPs. So these kind of VC funds, domestic VC funds, I think for the first time are taking shape for the simple reason that these are the people who really will believe in the startup ecosystem because they have gone through the journey themselves. And therefore, they will not have the kind of doubts that other traditional, investors in the domestic markets may have. So this is a trend, certainly, absolutely.
Perceived risk that an Indian investor sees in an Indian startup is significantly different and probably more nuanced and better understood than what risk is perceived from the outside looking in. And hence, yes, we're seeing a lot of early and grown stage startups, late stage funding coming from people who've done well, family offices, CTOs, as you said, CEOs, as you said, founders themselves.
While high interest rates in major economies turned global investors risk-averse, Indian entrepreneurs who have already tested waters when it comes to starting one's own ventures use this opportunity to deploy their capital and expertise. This, as a result, helped the Indian startup economy sustain. Experts also believe that the current funding scenario is not a slowdown but a period of revaluation for Indian startups.
I keep saying, I don't think there's a funding winter. For good companies, there is still availability of funding. There has been a rationalization of some of the valuations that used to be there. That's maturity. That's just coming of age. That's logical.
Experts agree that investments will continue to flow for startups that create genuine value, and the period of indiscriminate inflow of funds that used to happen earlier is over now.
Startup founders can also learn a lot from traditional businesses. There is no end to the success stories of Indian entrepreneurs. One such leading figure passed away last week. Prithvi Raj Singh Oberoi, who was famous as Beaky Oberoi, has left behind a legacy in the world of hospitality that will inspire people for years to come. But what after him? What next for the Oberoi Group? Tariq Ahmed finds out. Prithvi Raj Singh Oberoi, who passed away at 94 on 14th of November, had an acute eye for details, something which made him the doyen in Indian hospitality. Popular as Beaky Oberoi, he is credited with pinning Indian hotels on the global luxury tourism map. A popular joke sums up his observant nature and the habit of keeping a tab on even tiny details. People at the Oberoi Rajvilas in Jaipur often joked that the hotel spent more money on watering the lawns than it earned. Following in the footsteps of his father, Rai Bahadur Mohan Singh Oberoi, Beaky Oberoi built truly luxurious hospitality institutions which focused on the personalized services of the clients. His institution reflected the old world's hospitality that put the guests above everything else. Before joining his father's business, Beaky Oberoi worked in several prominent hotels across Europe. He then came back to India and worked in the Maidens Hotel in New Delhi before joining the Oberoi Grand in Kolkata. Oberoi Hotels has been credited with some of the milestones in India's hospitality industry. That includes establishing India's first modern hotel, the Oberoi Intercontinental of New Delhi in 1965, and it challenged India's conservative norms by employing female staff in the hotel. In 1966, the Oberoi Center for Learning and Development was launched to train hotel managers. Now the Oberoi Group has 33 hotels across 7 countries and 2 Nile cruisers. The East India Hotel, the parent company of Oberoi Group, has reported revenue of 2,096 crore rupees for financial year 2023. This is almost double of what was in FY22. It had reported a loss of 118 crore rupees in financial year 2021-22 when pandemic had struck. But in the next year, it reported a profit of 329 crore rupees.
The good news is that because of his amazing penchant for good quality and his desire to be precise and the finest quality of stuff would be ordered and bought and he would personally supervise it. So the results of Oberoi Group have shown a significant improvement over the last 2 years, particularly after COVID. The Oberoi Group has performed so brilliantly. And I think he has left behind a structure and a DNA and an ability in the organization to continue to perform well.
According to experts, the generation change in the Oberoi Group has already taken place. In an interview with Harvard Business School, Beaky Oberoi called his father as a businessman, himself as a hotelier, and his son as the operator. Beaky Oberoi passed the executive chairman position to his nephew Arjun Oberoi in May 2022. Beaky's son, Vikramjit Singh Oberoi, is the current CEO.
The Oberoi Group has now moved largely into professional management mode. And that is perhaps the long-term strategy that was planned by the family to make sure that governance and ownership are separated and that the high quality of management and the excellence in hospitality is delivered in a professional manner. That was the intent over the last several years that I've been watching the group. And I think now it has come to reality.
As of March 2023, Reliance Strategic Business Ventures Limited owned 18.83% in Oberoi Hotels' parent company, the East India Hotels, while Oberoi Hotels Private Limited owned 17.67%. The other significant shareholder is ITC Limited, which owns 13.69% of the company.
From a shareholding perspective, there could be changes in sometime in future, because as you know, Reliance Group owns 18.5% shares. The ITC owns about 15% shares. So one doesn't know. There has been a lot of speculation even in the past that these shareholders have been likely to be strategic owners.
Even in his 90s, B.K. Oberoi used to enter hotel rooms to see if everything was in place. He has indeed left behind a solid structure on which the future of the group is safe. The group has also moved into professional management mode, a move which will ensure that the effort of transition at the ownership level is minimal. Meanwhile, Oberoi Realty's recent move to enter Delhi NCR market pushed its share by over 4% this week. Moving on, shares of Manappuram Finance and Muthoot Finance have been in demand on the bourses ever since the duo announced their September quarter results. The shares have jumped up to 13% as against 1% rise in the benchmark Sensex index. As gold prices continue to rise, will the rally in gold financiers continue, or will it lose its sheen amid the RBI's recent directive on unsecured loans? Here's our next report.
Investors were quick to lap up shares of Manappuram Finance, rewarding the company's better-than-expected September quarter results. In Q2 FY24, Manappuram reported asset under management growth of 27% year-on-year, driven by growth in microfinance, vehicles, and housing. Moreover, aided by robust AUM growth and yield expansion, net interest income grew 26% YOY and net profit 37%. On the bourses, shares of the gold financier have surged 13% since the announcement of the result on November 13. By comparison, the benchmark Sensex is up 1.1% during the period. The positive effect of Manappuram's Q2 show rubbed off on shares of Muthoot Finance as well, which otherwise reacted negatively to its own results announced on November 10. Muthoot Finance's margins declined to 10.9% in the recently concluded quarter due to rise in cost of funds. Gold loan grew by 2% quarter-on-quarter as against 7% growth in Q1, while overall AUM growth stood at 20.6% versus 19% year-on-year in Q1.
The recent Q2 results indicate a very good performance by Manappuram with a 37% increase in net profit. Muthoot slightly disappointed with only 14.3% increase in net profit. Rising interest rates are now impacting the net interest margin and profits of gold loan companies slightly. This is getting neutralized by the increase in gold prices.
Expectations that liquidity tightening may soon reverse across the globe amid growth slowdown has been fueling the rally in gold prices. Price of the yellow metal has surged nearly 9% from its recent low of $1,830 per ounce to quote around $1,995 per ounce. While this may support the stock prices of gold financiers in the near term, analysts say the rally could come with a caveat.
After a soft US inflation data and a sharp correction witnessed in USD and US Treasury yields, the gold has seen some buying. In the medium term, the gold prices are expected to stay at higher levels, and therefore this would continue to aid the gold financiers in the short term. However, It is important to note that the demand for gold loans for NBFCs has been low, and therefore they have been expanding their book into other consumer loan area. The RBI has announced recently that they would be increasing their risk weights. We remain neutral on this segment, and we believe that there is a better risk reward ratio in other segments of the market.
The analysts thus believe the period of outperformance by gold loan companies is likely over. Investors, they suggest, should expect returns in line with market returns over the medium term. Today, on 23rd of November, global cues and weekly FNO expiry will guide the markets.
He's making plans for an early retirement. Business Standard.
Interestingly, part-time member of the Economic Advisory Council to the PM, Nilesh Shah, isn't impressed by Indians' love for the yellow metal. Shah claimed this week that India's dream of becoming a $5 trillion economy could have been achieved long before, if not for the habit of importing gold. Well, many would disagree, as it's an age-old debate. Moving on, another age-old debate is echoing in the Supreme Court chamber. 4 opposition-ruled states have approached the top court alleging governors' overreach. In our Explainer segment today, we tell you more about the recent controversy and also decode the power that the governors have.
Article 153 of the Indian Constitution says that there shall be a governor for each state. But like other constitutional position holders, governors too have come under scrutiny and criticism too. While some played by the rule book, others strayed. A lot of them have been accused of towing the central government's line and trying to please the people in power there, while some have set examples for others to follow. Sujit Singh Barnala had quit as governor in 1991. The reason? He had refused to recommend president's rule in Tamil Nadu as dictated by the centre. Barnala was transferred to Bihar from Tamil Nadu as a punitive measure, after which he resigned from the post. The colonial institution of governor is in the news again, as the Supreme Court has slammed the Tamil Nadu governor R.N. Ravi for withholding assent to 10 pending bills. At least 4 opposition-ruled states, including Tamil Nadu and Punjab, have approached the apex court for relief. But what does the Constitution say? Article 200 of the Constitution says a governor has 4 options when a bill passed by the state legislature is brought to his office. First, he may give assent to the bill. Second, he may withhold assent to the bill or reject it, in which case the bill fails to become law. Third, he may return the bill, provided it's not a money bill, for reconsideration of the state legislature. And fourth, he may reserve the bill for the consideration of the president. The same Article 200 of the Constitution also says that if the bill is passed again by the State Assembly and presented to the governor for assent, he will not withhold assent. But the governor has an additional power. He can reserve a bill for the consideration of the president. And the Constitution does not specify a time limit for the governor to assent, withhold assent, or reserve the bill for the consideration of the president. In most cases, governors have been using this provision to allegedly delay the bill. This is what B.R. Ambedkar had told the Constituent Assembly. The governor, under the Constitution, has no functions which he can discharge by himself. No functions at all. Even under this article, the governor is bound to accept the advice of the ministry. Therefore, the criticism that has been made that this article somehow enables the governor to interfere or to upset the decision of the cabinet is entirely beside the point and completely mistaken.
I'm backed by the nation's trusted bank,
SBI, the banker to every Indian.
The role of the governor was envisaged to facilitate a good relation between the centre and the state. Well, that's all we have for you today. For more news and analysis, please log on to business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.